Some new warnings that recent inflation changes reduce the likelihood of the Federal Reserve cutting those interest rates this year, which would keep mortgage rates high. Increasing prices combined with the falling inventory has negatively impacted the housing market this year, with mortgage rates staying high. Buyers and sellers are worried. So joining me now is Chairman of O'Leary Ventures, Mr. Wonderful himself, Kevin O'Leary. Kevin, great to see you. I do want to talk housing, but to get to that, we have to talk inflation. We have to talk interest rates. And you do not think the Fed will cut rates next month?
No, I don't. I'm not investing that way. If they do cut, it would be 25 basis points, which isn't that material. There are some significant challenges here, and I'll tell you what the Fed is thinking. And remember, the Fed, even though there's been so much Fed bashing, and every administration bashes the Fed. This is the sport of being the president. It happens all the time. But it doesn't really affect what the Fed does. And here's the quandary they're in. When you think about the tariff narrative that's gone on since April 3rd, there's been tremendous volatility in what actually gets implemented, in addition to extensions to places like Mexico for 90 days, or the ongoing narrative with China. And so if you're a CEO of an S&P 500 company, we just talked about Target a moment ago, and any other one, or even a small business in America, you don't know where the landing zone is for the final tariff on your product or service. You have no idea. So up to date to now, most of these companies, including behemoth automotive companies, have been absorbing the costs of increase of these tariffs, which have been put on them on and off and on and off, and they're just waiting. So if you're the Fed, if you're Powell, you're saying, I don't yet know when these behemoth companies are going to pass through these costs to consumers, which will be inflationary. We just don't have that number yet. So if we landed and we knew with certainty, let's say by the midterms in November, that the actual reciprocal tariff rate was only 10%, then Powell could give a read to it and understand, okay, I think the inflation is going to be relatively benign. But if it ends up being 35% or 39% like it is in Switzerland, or 35% in Canada, that's causing chaos on softwood lumber and goods and services from Switzerland that have not yet been baked into inflation. So if you're the Fed, with all of that information that you have, that we just downloaded together, you just say, no, no, Nanette, I'm not doing anything till I know where we land. And that is going to affect housing. All
right, so with so much uncertainty, if no interest rate cut happens, what does that mean for mortgages? What does that mean for the housing market? And what does it mean for the economy overall?
Well, if you're sitting at 7+% for mortgages, that does take the air out of the sails for home starts and for housing, because it is not 3.5%. It is materially higher. So what everybody's hoping for, and I'm almost saying dreaming, in the housing market, whether you're constructing them or selling them or you're a broker, is to see mortgage rates drop to 5.5%. That's the magic number that gets everybody off their high knees and starts looking for housing and starts turning housing. But that's not where we're at. You would need the Fed to drop interest rates almost 200 basis points for that to happen. And I think the chance of that is zero. And so we're going to be kind of stalled out here. Now, if you want to buy a house and you're a starter house buyer, you're going to end up buying 33% less square feet if mortgage rates are still between 7 and 7.5% versus 3.5 to 4%. So get ready for that. Your starter home's not going to be 1,500 or 2,000 square feet. It's going to be 950 square feet, maybe a condo or something, because that's what you can afford, because you've got to keep your mortgage payment around 1/3 of your after-tax income on a monthly basis, or you run into financial trouble. It's that simple. It's just do the math. And so if you think mortgage rates are going to 5.5%, great. But no matter how much you bash the Fed, as I like to say, the Fed doesn't give a poo-poo.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.